Hey traders, this is Ron at Market Tamer. Happy Fun Day Monday. Hope you guys had a fantastic weekend. As always, everything in this presentation is for educational purposes only. We're going to kick off here with USO, Unicorn, Sierra, Oscar. This is the US Oil Fund. It basically is used to track oil to a degree. It was up 11% today. So we closed the previous day down here at 11 with the drone strike in Saudi Arabia, which they're still trying to figure out. There's finger pointing and all this stuff. We'll just use price. We'll stay away from all the other topics and just go with what the price is doing. Right now, the price is up. However, I did read a report, and if it's true, they were talking about, hey, half of Saudi Aramco, whatever, their exports are going to be down. It sounds horrible. But then I heard another report that said, but that's only 5% of the overall demand. Then you start saying, so wait, it sounds really bad. You know, of course, hopefully nobody got hurt, but it's only 5%. So maybe it's not that big of a deal. It wasn't like the Strait of Hormuz was closed or something, right? So we'll see how this shakes out. A double-digit rise is still a big deal, and we'll talk about some energy stocks here because they were certainly on the move. But all things considered, it even came off its highs. So what would it take for oil to look like it would really break out? And what I would draw your attention to is this peak here in April. We get above here, which is right around 1380 or so. That's a breakout. Now these lower highs are completely washed. With today's move, we've taken out lower highs. We have basically a double bottom here, equal lows right around that. About 1050, almost on the button. We take out this, that is a major swing high, and that's what would get the attention. That maybe crude USO for a tracking purpose is going to start moving higher. As of today, it's a one-day move, maybe a little further. I mean, even if it goes another 10% higher, that basically puts us up here. So it almost hasn't moved like today yet before it can even take out that high. All right, short term, yes, USO is bullish. Well, you would think that if USO was up really high, the markets might have gotten killed. And then you go to the spiders and you say, wait a minute, we're only down 60 cents according to TradeStation, 0.2%. We're still hanging out at our all-time highs. Now on this chart, just FYI, because I'm using TradeStation going forward, probably for the majority of our videos, the blue line is the 8-day EMA, red is 20-day EMA, and then the long-term moving averages are your simple moving averages. These next two are your institutional moving averages. 50-day in orange, 200-day in purple. We're above them all. That's bullish. If I go back out on a daily chart, you tell me what's the direction. Lower left, upper right, that's bullish. So right now we are producing what will be called a double top here and here, but it's only a couple days. We haven't seen volume increase. What would concern me if I zoom in is if we would see something here, see a spike in volume early August, we got a little bearish engulfing, we start coming down, that would put the appearance of a double top and potentially lead to another pullback. Remains to be seen. But given everything that happened today, this is nothing. The market just totally blew this off. Then they talk about the interest rates. That's all fine. Everybody's got an opinion. They went through their 2 seconds of infamy on CNBC or Bloomberg, wherever it might be. But the big money doesn't care about all those places and people. They're doing their own due diligence. So we'll follow the money. And right now, the money is pushing this market higher. Take a look at DIA, which is the Dow ETF, the diamonds. They were down $1, a lousy 100 points. It was funny. I know I made the mistake of turning on CNBC in the car, and they were talking about the markets getting hurt and hit, and I think drubbed. I think one of the analysts used. You guys might have heard it. And I was thinking, wait, did something happen while I was out for lunch today? So I checked my phone. I'm thinking, we're down 100 points. Maybe when you get on TV, you just lose your mind and you just start talking about stuff that doesn't really make sense. Maybe that was their issue. But the Dow down 100 points when it's at 27,000 is pretty much not even a hiccup. It's more like a blink or something, The market, everything here is still bullish. Is it a double top? Yes, but we're above moving averages. I just find it amazing that they try to find some kind of adjective, but they don't really think before they speak. This was nothing. Now, tomorrow, if we're down 5%, that's a different story. I think we would all agree that's probably a bigger sell-off. The Qs were down 1/3%. They hit their 8-day, they bounced. We still have these higher lows in here. I also still believe, if you want my 2 cents, that if we break out to new highs on a closing basis on these indexes, first of all, factually, the sky's the limit. There's no overhead resistance. But man, you start putting in higher lows like this and you start bursting higher, and even a spike in oil can't stop you, a drone attack. It just shows you the resilience. There's just so much money still flowing into the US market. And remember, we talked about the reasons why. Where else can the money possibly go? We've been saying that for quite some time. It's still the only game in town. Doesn't mean we can't correct, because we still get corrections, but the resiliency is there. If we look at the IWM, which is the small caps, they were up 0.44%. Well, what do you know? Now, IWM, keep in mind, we still want to close above this 160 or so area. That would be a breakout. And then MDY, which are your mid caps, they were also up today just a little bit. They need to get above, I call it 362, something like that. Now, you know what, while we're on the charts here, let me go back. Let's use the S&P. So we're going to look at a bunch of energy stocks, but I want to address two questions. One was, you know, who's in control of the market? As long as we remain above all the moving averages, bulls are in control. Whether you're a bear, you're a bull, doesn't matter. Technically, bulls are in control. Now, what would trouble look like on the charts? That was another question I got. Remember, nothing is perfect. Whether we use Elliott waves, Gann, Ichimoku, the cloud, not the rash, you want to use fibs, you want to use Keltner channels, Bollinger Bands. I love candlesticks and volume. I like to keep things simple. I like Ichimoku too, whether it can be Elliott wave. You can use anything you want, and that's fine. But one of my most favorite indicators are the moving averages. That is what institutions also are aware of, above or below. So to me, I would focus in on the orange line, which is the 50-day, and the 200 in purple. The moment we start fracturing them, and if we're above them, fracturing is moving to the downside and closing below them. That's when you are, if a bull, you're put on notice. You get back above them. If you're a bear, you're put on notice that, hey, here we go. Something else you can try to use for maybe a shorter term is an 8-day in blue and a 20-day in red. When the blue crosses down through the red, that's a technical sell signal. We got it there, and then we went lower. We got a buy here, then we went higher. Here we got a sell, here we got a buy. If you go back on time, the 8 and 20 can work pretty well, and then sometimes you can get whipsawed. Here was a buy, there was a sell, ooh, but there was a buy. It was about a 2 or 3 day buy. Here was a 2 or 3 day buy, false signals, but it's often very good at catching trends too. Now, maybe you want to use a 5-day and a 21-day or an 8 and a 13. I don't really care. There's more than one way to make chili. You get the idea. But these are typically what I use. Hopefully that helps answer those two questions. Now, let's talk energy stocks. Let's take a peek at some of these. Now, you'll notice a couple days ago, I put together a video that retail stocks were perking up a bit. Energy stocks were also perking up. We saw this, which is interesting. I'll leave it at that, that some of these energy stocks were starting to pop, and you know who they were because I did them in the video. You can go back on YouTube or whatever and just go back and you'll see which ones we talked about. But we saw signs that something was building in terms of I don't want to use the word energy, but there was buying being built. We were making higher highs. We're starting to break moving averages. And then all of a sudden you have this weird thing on the weekend with the drone strike. So if you were following any of those or jumping in, today was a really good day. Well, if we take CRC, for example, big volume, closed the highs of the day. Now, if this was not news driven specifically on a drone strike, assuming that's the case, right? We're going to assume that's the case. This is a big deal. But because it's a one-day thing, I would almost want confirmation because it's going off a fixed news event over the weekend. If we get another up close, more big volume, closing near the highs of the day, then maybe this is even more believable. But if we assume we didn't know about the drone strike, we're just simply looking at a chart like CRC and all the others we're going to look at. This is a breakout target. You go back up to previous highs. Here's a double top at 20, and looky there. The 200-day moving average in purple is at 19. So 19.20 could be resistance. There's a little swing high here. I would say this, because we have a top here and a top here, 20 is probably going to be more important than, what is that, 22 or something? And then you go back up here. If we look at CLR, which is Continental Resources, again, huge volume, big pop, sort of off the highs of the day, but this one's a shame because, man, it took up all this real estate already. So not only does it needs to close above the 200-day in purple because, hey, look what happened last time it got close, right? And by the way, the reason I highlight this is that reversal was not at previous highs. As it got to the 200-day, they turned it lower. So that was actually an inflection point. This time, trust but verify, one of the great quotes, let's let it get above the 200-day. Then maybe the target could be up here. If we go to Whiting, which is WLL, this had a banner day, 47%, but, oops, sorry, let me zoom in here. Let me just change symbols and come back because that's the difference between Thinkorswim or TradeStation. I got to use the mouse. Here on WLL, we were 1 day above the 50-day here, and we just got tanked. Here we sit again. What is the irony in that? That's why I want to be sure, personally, this is not a one-hit, one-day knee-jerk reaction. Oh my God, there's going to be war, there's no oil, and then you find out, oh, it's only 5% of worldwide demand. Assuming that report was right. I don't care what the beliefs are, but the fact that we got stuck here, and ironically you couldn't get over it, well, now get over it. Show me. Give me another strong volume day tomorrow. If that happens, gap fills the target. And that would be all the way up there, ballpark 17.5. That's a really nice big move, even after a 47% rise. Here's APA. This is Apache. This is also one we've talked about. Look at the 50-day. You get above it, pop goes the weasel, and look where it goes. Right into this consolidation overhead supply. So all the folks, think back actually to May. This is a bear flag. We break out of the bear flag, stock collapses $2 more. It rallies, and look what it rallies up to. The previous ledge. So anybody that bought in here, in the theory is, oh, we're going to sell, we're going to sell, we're going to sell. It puts a cap on the stock. The overhead supply is being absorbed. The stock can't go any higher. Then the 50-day is hit, and there's no interest. And then down she goes 28 to sub 20. We go back up, we get stuck right in the overhead supply. So this was overhead supply. Now this is overhead supply, and that put a cap on the stock. If we can clear the 200-day, and I'd want to say it clears 30, then it can probably cut right through there, and then the target's up here. I hope that's helpful. Doing a lot of talking here, but hopefully it's helpful for you guys. Here is Devon Energy. Now, Devon, on the other hand, did close above its 200-day, but guess where it stopped? Double top overhead supply. So anyone that tried to buy in here puts a little bit of a cap on the stock. If they're selling, you would still want to clear these highs. Ballpark 29. Canadian CNQ. Canadian Natural. All right, big pop, big volume. We also saw big volume over here, but it really didn't do anything. This time we cleared the 200-day, also taking out these highs. Of all the ones we looked at, purely from a technical perspective, I do not know where these companies generate their revenue. I do not know what their debt load is. I don't know if there's any dividends. I'm ignoring all of it. This is purely technical analysis from an educational perspective. But this one took out the 200. You were already above the 50. You took out a double top. 31.5, that's a target, still 10% higher. Not saying it's going to get there, but that's the technical target. Here is Marathon. This one gapped up, sort of closed in the upper third of the candle. It would still need probably to close above 14.5. If that happens, you know, the 200 days right there, that's a problem. This was the gap down that led to a plunge. This one's a little more messy, 200-day, then above 16, then maybe it can work its way back up. Here is XOP, the ETF that we talked about specifically. Got above the 200-day, backtest, comes down. Today it launches itself higher. I would also want to see XOP clear the 200-day. I think if it can get above this reversal here and the 200-day, then probably up here it could go. Because while this is ledge, that it fell off a ledge, which is going to be some overhead supply, it is an ETF, and if it starts running, the others are probably running too, maybe help carry it higher. And here is XLE, the energy ETF. Closed off the highs of the day, but still higher than where it closed lower than where it opened. There was almost zero follow through. It could not keep running throughout the day. That is noteworthy. Black, dark, filled bodied candles are not a bad thing, but considering what today was, and that's all it could do, very interesting. So it's getting caught in the overhead supply all in this area. I would say we got to clear all of it, maybe 64.5 or 64.5 or so. Then the target's up here. Again, all of them that we looked at, CNQ technically, I think looks the most interesting. And then two other stocks, we'll go off energy here, is Children's Place. Talked about some of these retailers. Could not get above the 200-day. It rolls over, targets right back down to those lows. I told you guys about this one a while ago. You get that kind of gap down. Let me zoom in. Gap down, reversal, close the highs of the day. Epic volume, that was the final flush. Then you see something like today. This is not looking good. So this is still lower highs and lower lows. It's a big downtrending channel. This thing would definitely now need to take out the 200-day on a closing basis probably at least average to above average volume as well. And I'd want that sucker closing at the highs of the day, because last time we got above it, it was a 1-day fake out, 2-day fake out, and down you went. And then GM is in the news. I guess there's some union workers that were using money that they shouldn't have been using for stuff, and now there's a strike and all this. I don't really follow or trade the automakers. I follow Apple quite a bit, so I can know more, quote, fundamental outlook there, future growth, etc., from a personal standpoint. But GM, I have no insight. So what I would do, I would just go back and say, hey, let me scroll out here, look at about 2-3 years worth of data. And if you're a GM shareholder, you probably wish you weren't, because while the market keeps going higher, unless you're doing covered calls, dividends or something, you're not making squat. So this thing is just one big range. If I zoom in, going back the last year or so, still range bound. I zoom in further, sort of back exactly a year ago, you're range bound. Maybe something above 41 is bullish, something below 36 is bearish. I have no idea what's going to happen here, if there's going to be an epic strike or whatever. There is like an island reversal type situation. Gap down and then gap up. That's unfilled price territory. If we lose 36, probably 33, 34 is the target. But I just don't think there's a great reward to risk here. You're talking about a buck or two here, a buck or two here. I like stuff that has a lot more in between, real estate in between, free range in between. So that is it. Longer video. Hope you enjoyed it. Talked about energy. We'll see what happens tomorrow, and I'll be back with you in that video. So wish you guys all the best, and have a great day.